The great accumulation race is underway.
How big of a deal is this BlackRock ETF?
Everyone's heard of the space race, where a bunch of countries got together and they all tried to get to space first. But now what we're going to see is the great accumulation race. We have institutions and individuals all scrambling to try to get their share of the 21 million Bitcoin that will ever be in existence.
This will serve as a significant catalyst for the adoption of Bitcoin and other cryptocurrencies, since Bitcoin is a highly illiquid asset and these Bitcoiners don't want to sell to Wall Street. The only way the price can change when there is a large influx of demand for a fixed supply of highly illiquid assets is for the price to increase, which suggests something fishy is happening. However, as you may already be aware, BlackRock is cooperating with Coinbase to custody of Bitcoin, while Coinbase is being sued by the SEC. BlackRock still requires the SEC clearance, and BlackRock only acts in this manner if they are aware of the situation. The question is, what BlackRock knows about the SEC and Bitcoin that the rest of us don't pay very close attention to this discussion? Even though everyone knows the SEC and Gary Gensler are completely hostile to the idea, everyone said, well, they're going to say no to a Bitcoin ETF just like they said no to everyone else. Have a simple response for that. I always feel like I'm missing something here, but I believe you're correct. Thus, I believe you're a sniffer. No, I believe you're onto something, and I think your nose is always fairly good. What part will XRP play in the recently obtained in-principle license from the Monetary Authority of Singapore that Ripple has obtained? Unveiling a complex system of laundering while millions of stolen XRP tokens bravely flee, is Bitcoin maximalist Max Kaiser correct when he claims that XRP is too centralized? Last but not least, Forbes warns that a $15 trillion earthquake is about to hit the cryptocurrency market, spurred by BlackRock's interest in the Bitcoin ETH, but will it change demand for XRP? John E. Deaton, a pro-XRP attorney, offered his thoughts on Ripple's recently obtained in-principle clearance from the Monetary Authority of Singapore. Attorney Deaton stated in a tweet a few days ago that the revelation is fairly significant, given that just about 20 organizations have acquired such a license issued by the nation. Notably, lawyer Deaton claimed that even though XRP will be used, the revelation had no impact on the price of the token. Deaton added that as Ripple and all XRP holders are partners in a shared venture, the price of XRP should respond to the company's efforts to gain profit. However, he continued, XRP followed both Bitcoin and the overall climate. Deaton's tweet, meantime, responds to all queries about whether the MPI license will let ODL transactions use XRP. According to yesterday's news, Bill Morgan, an Australian attorney, questioned Monica Long, the president of Ripple, about whether the license Attorney Deaton, however, stated that the XRP could be used with the right license. Recall that this week, Ripple gained notoriety when the MAS granted in-principle clearance for a major payments institution license. It's interesting to note that the blockchain titan joins an exclusive group of less than 20 companies who have been granted such a license. The on-demand liquidity solution in Singapore can now be scaled by the Ripple subsidiary Ripple Markets Asia Pacific thanks to the in-principle license. It is important to note that ODL uses XRP as leverage for international payments. Many anticipated that as Ripple's in-principle license news went viral, the price of XRP would immediately soar because ODL was a component of the deal. The coin did not, however, show any appreciable upward movement. While it would seem that the announcement was the cause of the price increase, a careful examination of most cryptographic assets demonstrate that they concurrently registered little profits. XRP price is presently hovering at $0.49. Many people are now questioning how the SEC came to the conclusion that XRP investors are partners with Ripple in this scenario. It is important to note that the SEC asserted this in its lawsuit against Ripple. Recall that the regulator accused Ripple, which is noteworthy. There is no set time for Judge Torres to render a summary judgment verdict, except for rumors. Before the end of the year, Ripple expressed confidence that the issue would be settled. Bob asked Gensler if BlackRock would suddenly file for a Bitcoin ETF that was spot Bitcoin rather than based on futures. And Gensler responded, "No way, that's not going to happen." However, at the same time, they're assembling some pretty strong partners from a custody standpoint. They include the Bank of New York Mellon, Coinbase, and a surveillance agreement with NASDAQ to help with the security aspect of it. They're trying to convince the SEC that there are all the safety measures in place to offer them the assurance they need to get their application accepted. I believe the most important thing is that, as Gensler stated, we won't take any action until the exchanges are regulated and Coinbase is not regulated. However, my question is, do you believe that this will change their minds? I am unable to do so without clear regulatory authority, and they will not be successful in passing a bill through Congress. So he has now resorted to suing everyone in an attempt to regulate, essentially, by filing complaints. You know, they're both right. I'm thinking I still don't quite know how they're going to change his mind. And say, look, you agree to get regulated. What would that do to your business? Imagine institutional investments, just 1% allocation to Coinbase, and what that would mean. We're talking about if BlackRock doesn't believe they have a chance by the disclosure of their shadowy secret plan. If you're interested in generating money with cryptocurrencies, be sure to subscribe to our channel for daily videos that keep you updated on the entire cryptocurrency market. The truth is that institutions and people frequently engage in backroom transactions, such as these insider agreements. I'm saying BlackRock and organizations like BlackRock know that cryptocurrency is here to stay. They're trying to get in business with cryptocurrency not for the next few years, but for the next few decades. They always do things like this, scaring retail away during the best times to buy. Take a look at this. Gary Gensler claims that cryptocurrency needs to be cleaned up, but approves Fidelity, Citadel, and Charles Schwab for an institutional crypto exchange only for institutions to scare retail and hold retail up. This terrible price action in crypto has given us pause and forced us to ask a difficult question. Should we continue to cover Bitcoin? Unfortunately, the answer is no. Let the institutions in because they missed the first 12 years when retail was accumulating. Additionally, even though BlackRock faces some difficulties getting approved, doing so sends a clear message to the rest of the world about the direction they intend to go in. I believe that BlackRock is now realizing this. Bought Bitcoin and held it since the beginning of the pandemic, you've outperformed almost every single hedge fund on Wall Street. You just Bitcoin and chill, and I tend to think that these investors, they're not going to go put 100 of their assets into Bitcoin. But what they are starting to say is, does this warrant a 1, 2, 3% allocation into a portfolio? And I think that argument is becoming much more hard to ignore. And so what I think you're going to start seeing is more and more institutional investors starting to put money into Bitcoin that comes after the Bitcoin ETH fund. That comes after the Bitcoin ETH? Let's stop here for now. Please don't forget to click the like and subscribe button to be updated whenever we post a video like this. Thank you and see you in the next one.